All right, it is Wednesday, July 24th. New record high in NASDAQ and S&P. As I've been telling you, the Dow trailed today just because Boeing and Caterpillar dragged it down. But the Dow's going to catch up, and the Dow will make a new high as well. Boeing, of course, was hit with the problems with, was it the 757 or that plane? And Caterpillar, I guess investors did not like the earnings, but the Dow will go higher. Stock market is supported by a record amount of fiscal support. I've been telling you this for months and months and months. We could go all the way back to the big correction of late last year. People panicking, people freaking out. I had guys canceling my service because they said I didn't know what I was talking about. The ones who stayed, they bought into that dip, and they're doing very, very well. Same with gold, same with oil, all those positions. Now, tomorrow we get the ECB meeting and rate decision. Now, there will be no change in interest rates. However, the ECB is likely to come out, number one, with language, and number two, possibly with new measures announced intended to knock down the euro. Look for a sharp decline in the euro tomorrow as a result of the ECB's statement. Of course, the zombies will be all over the euro. Longer term, all these things, negative interest rates, fiscal austerity, these are bullish for the currency. It'll take some more time for this to play out. But I mean, you can go back and look at the inception of a lot of these policies. You know, the euro was at what? 103 back in 2017. It's at 111, 112 now against the dollar. So it has appreciated, but recently a lot of selling from just portfolio shifts, bringing the euro down in reaction to what the ECB has been doing, what they have been announcing. And by the way, in September, and remember they said this earlier this year, in September they're going to engage in that TLTRO, which is again injecting liquidity. All these central banks running off of the same playbook, the same nonsense, believing that the problem is liquidity. I mean, it's ridiculous. It is ridiculous. I mean, if you see reserve balances globally in all of these major systems, if you're talking about the United States, if you're talking about Japan, if you're talking about the ECB, if you're talking about China, if you see reserve balances in all of these monetary systems, they have gone up exponentially from where they were prior to the financial crisis back in 2008 and 2009. And that has not led to stronger or more rapid growth or higher inflation for that matter. They have deluged monetary systems with enormous amount, trillions upon trillions and quadrillions, so they keep doing the same thing over and over again. And in fact, what is really happening, and as I have been explaining, is that this massive dump, enormous dump of the liquidity, right, has constrained banks. In some cases, it has actually caused banks to become insolvent because they need capital to meet regulatory requirements, specifically leverage ratios, okay? And the central bankers just keep doing the same thing. They keep doing the same thing over and over and over again. And we're going to have the Fed engage in the same thing a little bit later this year. They're going to resume purchases of securities again. You know, that might bring reserve balances up. Hopefully it holds it steady, okay? But they are going to end their roll-off in September. We know this. Oil, today, very interesting. We had the EIA report that came out, as it does every Wednesday. I sent out my full analysis of that report. it was bullish. Okay, you had an 11 million draw. This was the 6th consecutive weekly drawdown in crude inventories, I think for a total of almost 41 million barrels over the last 6 weeks. A big increase in gasoline demand, an increase in distillate demand. You had a little bit of a pullback in refiner inputs, and I think that's still the result of the Hurricane Barry. All right, you had a nice jump up in exports, both in crude and in petroleum products. You had a little bit of an increase in crude imports, but they're still historically very, very low. All right, and the initial reaction was the market popped higher, oil popped higher, and then got hit with a sell-off. Now this is classic. This is classic zombie behavior, because the market did not do immediately what the zombies wanted it to do. They start puking out their positions. So first they buy it when it's already high. Like we've been buying it on the dips. We've been buying it on the dips. And by the way, you know who else has been net long in here? Commercials, producers, the trade in the oil market, the people in the trade, the firms in the trade dealing in oil, they are net long this market. So what do the zombies do? You see their behavior, and it's very, very easy once you understand how they operate, how to take their money. They see that headline number, an 11 million barrel inventory drawdown. They jump in there long, and then when it doesn't skyrocket, because that's what they're hoping for, this is just gambling what they do. It's pure gambling. It starts to come down, and then they all sell on top of each other, cascading the market down, when in reality, that was a very bullish report, and we will see higher levels. So this is, to me, I mean, I've always in the past used the analogy of the poker hand, the poker game. I mean, I see right through them. I see right through them. It is classic behavior, classic behavior. You know, so much of this trading, and I'm not talking about the longer term stuff, because the longer term stuff is all dictated by the fundamentals. But so much of this trading is gamesmanship. It's knowing who your opponent is. And if you know who your opponent is, and by that I mean that person's behavior, their behavior. I mean, it's so easy to take advantage of them. So easy to take advantage of them. And that's what we do. That's what we do. So again, better information, the correct understanding. I'm not even going to say better understanding. I'm going to say the correct understanding and the mental game. Put all that together. It is an absolute winning proposition every single time. Every single time. I have people criticizing me, not just from that market correction back in November and December, but going back to my gold position. Oh, look at you with that gold. Yeah, look at me, okay? When it was in the 1100s, when it was in the 1200s, and don't forget, that was a pullback from the high 1300s, which we were adding. Look at me. Look at me. All right? All this stuff, by the way, you need to get educated. You need to get mental game. You need to have the proper understanding, and you need to be exposed to the proper information. That's what I do. pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader if you want to be a winner. Bye.